In March 2025, China abruptly halted U.S. beef imports, not with a formal ban, but by letting export registrations for American beef plants quietly expire. This subtle yet impactful move caught many by surprise. This move instantly froze a multi-billion-dollar trade, leaving U.S. exporters in financial limbo and forcing a rapid rethink of export strategies. Companies scrambled to find alternative markets, but the sudden loss was a heavy blow. For years, China had been a booming market for American ranchers. But overnight, that opportunity vanished. The impact rippled through rural communities, affecting not just ranchers but also local economies dependent on the beef trade. The sudden closure created a vacuum, quickly filled by other beef-exporting nations eager to step in. Countries like Brazil and Australia saw an immediate uptick in their exports to China. Russia, in particular, saw a chance to expand its agricultural exports and strengthen ties with China. This was a strategic move, aiming to solidify its presence in the lucrative Chinese market. The shift was more than economic. It was a geopolitical power play, redrawing the map of global beef trade. The U.S. found itself sidelined as new alliances formed. This episode highlights how a single administrative decision in Beijing can send shockwaves through global supply chains. The interconnected nature of modern trade means that no country is isolated from such decisions. For American farmers, it was a stark reminder: access to foreign markets is never guaranteed. The uncertainty forced many to reconsider their business models and look for more stable markets. The world watched as a lucrative trade route became a dead end, raising the question: was this a temporary disruption or a permanent realignment? Analysts debated the long-term implications. The answer will shape the future of food trade for years to come. The global beef market is now in a state of flux, with new players emerging and old ones adapting to the new reality. The fallout was immediate, and the consequences far-reaching. The world of international trade had been irrevocably changed. China's method was subtle but devastating. Instead of a dramatic announcement or a sweeping embargo, the country used bureaucracy as its weapon of choice, quietly shifting the rules of the game. On March 16, 2025, export registrations for hundreds of U.S. beef plants simply expired. There was no warning, no negotiation, and no opportunity for American companies to renew their paperwork. No public ban, just silence, leaving American beef shipments stranded at ports, containers piling up and trade at a standstill. The lack of official explanation only deepened the confusion. Registrations for U.S. pork and poultry were quietly renewed, but beef was singled out. This wasn't an accident or a clerical error. It was a calculated move. China's Ministry of Commerce announced an investigation into beef imports, citing a supposed domestic oversupply and the need to protect local producers. But the timing and selectivity raised eyebrows. Yet only U.S. beef was locked out, while other countries like Brazil and Argentina continued trading freely. Their shipments sailed through customs, filling the gap left by American producers. The lack of explanation from Beijing left U.S. exporters guessing: was this about market protection or geopolitics? Some suspected it was retaliation for unrelated trade disputes. The uncertainty paralyzed the industry, making planning impossible. Ranchers and processors were left in limbo, unable to predict if or when the market would reopen. In August, China extended its beef import probe, allowing other suppliers to keep shipping, but U.S. plants stayed delisted. The message was unmistakable. The message was clear. The door to U.S. beef would remain closed for the foreseeable future, with no sign of compromise or reopening. American exporters faced mounting losses, forced to discard unsold products, while competitors from South America filled the gap in Chinese supermarkets. The move deepened the crisis and solidified China's new trade priorities, signaling a shift in global alliances and supply chains. For the U.S. beef industry, the freeze was a targeted blow, one that would take years to recover from, if at all. The global beef market was suddenly and dramatically reshaped, with ripple effects felt by producers, exporters, and consumers around the world. The impact was swift and brutal. Practically overnight, the gears of a massive export machine ground to a halt, leaving businesses and workers stunned by the suddenness of the crisis. Before March, U.S. beef exports to China topped 2,000 metric tons weekly. Shipments moved like clockwork, feeding a booming demand and supporting thousands of American jobs. But after the registration lapse, sales plunged to just 54 metric tons, a staggering 97% drop. The numbers told a story of devastation, with graphs and charts showing a freefall no one could have predicted. Chinese importers, fearing rejected shipments and costly delays, stopped ordering overnight. The uncertainty was too great, and trust in the supply chain evaporated instantly. The supply chain, from meat packers to ranchers, was thrown into chaos. Every link in the chain felt the shock, as orders dried up and operations stalled. High-value cuts meant for China now had no destination, creating a logistical nightmare and mounting financial losses. Warehouses filled with unsold beef, and the pressure on companies grew by the day. Companies scrambled to reroute or store unsold beef, incurring heavy costs. Cold storage facilities reached capacity, and rerouting shipments to other markets proved nearly impossible. The collapse exposed the risks of relying on a single export market. Suddenly, the vulnerability of the entire industry was laid bare for all to see. Hopes for a quick fix faded as weeks passed with no improvement. Executives watched the numbers, waiting for a turnaround that never came. Industry analysts confirmed this was no minor hiccup, but a fundamental rupture. The shockwaves were felt not just in boardrooms but across rural communities and global markets. The U.S. beef industry faced a new reality, one of lost revenue and uncertain futures. For many, the path forward was unclear, and the sense of loss was profound. Weekly export reports became grim reminders of what was lost. Each update brought more bad news, deepening the sense of crisis. The severed link to China left lasting scars across the American heartland. Small towns and family ranches felt the pain most acutely, as livelihoods hung in the balance. The fallout would ripple for years, reshaping the industry and the communities that depend on it. The story of the collapse became a cautionary tale for American agriculture. China's move was rooted in its own beef glut. In 2024, China imported a record 2.87 million metric tons, flooding the market and crashing domestic prices. Local farmers struggled, and Beijing faced pressure to protect its agricultural sector. The government launched an anti-dumping probe, signaling a shift toward self-sufficiency. By mid-2025, Chinese beef farming returned to profitability, thanks to import restrictions. For global suppliers, the landscape grew tougher as China's need for foreign beef shrank. Blocking U.S. beef was both a market strategy and a political message. The move eased China's oversupply while leveraging trade in its rivalry with the U.S., the result a tighter, more competitive market for exporters worldwide. The loss of China hit U.S. ranchers hardest. Premium cuts once bound for Asia now sold for less, or were ground into hamburger, slashing profits. Some estimates put annual industry losses at $4 billion. For ranchers already squeezed by rising costs, the loss of a major buyer was devastating. Investments made to meet Chinese demand, special genetics, feeding programs, lost value overnight. The sudden glut forced prices down in other markets, hurting all producers. Trust in the Chinese market was shattered, chilling future investment. The ripple effects threatened the stability of rural communities across America. As the U.S. exited, Russia moved in. Russian beef producers, eager to expand, saw a chance to fill China's supply gap. Moscow viewed this as both an economic and geopolitical win, strengthening ties with Beijing. Reports suggested Russia could secure over $1.2 billion in new deals. This shift was part of a broader trend, deepening Sino-Russian cooperation amid Western tensions. For China, diversifying suppliers was a strategic move, rewarding partners and reducing reliance on the U.S. Other exporters like Brazil and Argentina also benefited, but Russia's political significance stood out. The new hierarchy of suppliers was shaped as much by politics as by price. The global beef trade was being rewritten in real time. Industry leaders voiced alarm at the sudden halt. Joe Schul of the U.S. Meat Export Federation summed it up. Nobody wants to put product at risk. The financial gamble was too great, freezing billions in trade. Analysts confirmed this was a total market failure, not a slowdown. The lack of clarity from Beijing left U.S. packers in limbo. The loss of up to $4 billion in exports threatened jobs and rural economies. Experts warned that regaining lost markets would be slow and costly. The arbitrary nature of China's move undermined trust in global trade rules. The beef dispute set a dangerous precedent for all international commerce. U.S. officials argue China's actions violate the 2020 Phase 1 trade deal. The agreement was meant to ensure transparent, predictable plant approvals for U.S. exporters. Instead, the sudden lapse of beef registrations signaled a return to arbitrary barriers. Formal complaints were filed, but China offered no resolution. The crisis became a test of the deal's value. If China could block trade unilaterally, what was the agreement worth? U.S. companies that invested based on the deal felt betrayed. Confidence in stable, rules-based trade was shattered. The beef dispute threatened to unravel one of the few achievements in U.S.-China trade relations. The beef dispute is just the latest in a long saga of U.S.-China trade friction. Agricultural trade has become a bargaining chip in a broader geopolitical contest. China's move combined tariffs and administrative barriers, making U.S. products less competitive. The result? American farmers face new disadvantages, while China turns to friendlier suppliers. The shift signals a potential fragmentation of global food trade into rival blocs. Food security and national security are now deeply intertwined. A sudden market closure disrupts the delicate balance of global supply and demand. Farmers, exporters, and consumers worldwide feel the impact through lost markets, lower prices, and reduced choices. The great beef fallout of 2025 is a warning. The future of food trade is more uncertain than ever. The world must adapt to a new era of contested, politicized commerce.